Welcome back to The Explainer. I am so glad you're joining us today because, wow, do we have a fascinating company to unpack. We are doing a strictly objective, data-driven deep dive into Amphastar Pharmaceuticals, specifically looking at how they've kicked off early 2026. Now, if you follow the biopharma space at all, you already know these earnings reports can be a total maze, right? They're dense, packed with complex accounting, and usually throw off totally mixed signals. So my goal today is to just cut right through that noise. We're going straight to the source, the actual SEC filings, the earnings calls, the raw market data, to figure out exactly what's going on under the hood here.
Okay, let's dive right into this. Here is our roadmap for today. First, Amphastar at a glance. Second, by the numbers. Third, the bull case. Fourth, the bear case. And finally, the pipeline outlook. All right, Section 1, Amphastar at a glance. Let's do a quick business overview and run through some financial terminology. So, Amphastar is a specialty biopharmaceutical company. They really carve out their niche by focusing on technically challenging products. We're talking injectables, inhalation therapies, and intranasal treatments. Now, as we get into the numbers today, you're going to hear me use the phrase non-GAAP adjusted earnings. I know most of you know the drill, but let's just quickly decode this Wall Street jargon so we're all on the exact same page. GAAP is your standard raw accounting, but non-GAAP adjusted earnings. That strips out all those one-time costs, tax effects, and non-cash expenses, like share-based compensation. Wall Street honestly prefers this metric because it just gives us a much clearer picture of a company's true day-to-day operating performance. Moving right along to Section 2, by the numbers. Let's look at that Q1 and Q2 2026 financial data. Grounding our analysis strictly in their Q1 Form 10-Q, let's look right at the top line. We're seeing net revenues hit a really solid $171.1 million for the first quarter. Not bad at all. But actually, move your eyes down a bit to the operating expenses, specifically R&D. Research and development spending jumped up to $26.7 million. And this brilliantly illustrates a company that absolutely isn't just resting on its laurels with its current products. They are aggressively pouring cash back into their own pipeline to fuel future growth. So naturally, you might be wondering, how are they funding all that R&D? Let's check the balance sheet. Right at the top, look at their cash and cash equivalents. We've got $170.9 million just sitting in the bank at the end of Q1. Plus, there's another $121 million in short-term investments. The crucial takeaway here is that Amphastar is operating from a rock-solid foundation of stability. They definitely have the liquidity to weather any market turbulence and actually fund those strategic initiatives. And man, that brings us to the blockbuster number from their Q2 report, 91 cents. That is their Q2 non-GAAP adjusted earnings per share. To fully grasp why this is such a huge deal, you need to know that the Wall Street consensus estimate was sitting at just 62 cents. Amphastar absolutely crushed those expectations. They beat it by a massive margin of 29 cents per share. I mean, that is the exact kind of earnings beat that forces the entire market to stop and pay attention. But look, it's really not just about top-line revenue. It's about operational efficiency and evaluating their competitive moat. Notice the gross margin expansion we've got right here. Back in Q2 of 2025, their gross margin was 49.6%. Fast forward to Q2 of 2026, it's expanded to 50.8%. Why does a 1-point jump matter? Well, it tells us their growth isn't just coming from blindly selling more volume. It's coming from a stronger, much more profitable product mix, heavily relying on those technically challenging treatments we talked about earlier. Simply put, they are keeping a larger chunk of every single dollar that comes through the door. All right, on to Section 3, the bull case. Let's talk about those key growth drivers and wins. The growth narrative here is just packed with green flags. Q2 revenue hit $183.9 million. That's a solid 5% increase year over year. But the real stars of the show, the newer products stepping up to fill the revenue gaps. Back in April, they launched an ipratropium bromine inhalation product, and right out of the gate, it generated $8.4 million in sales. We're also seeing steady, continued gains from mainstays like iron sucrose and teriparatide, which are really doing the heavy lifting for that gross margin expansion we just looked at. And maybe most importantly, prescriptions for their emergency treatment Baqsimi up by a robust 17%. The actual patient demand is undeniably there. But let's flip the coin. Section 4, the bear case. Time to look at the risks, headwinds, and market pressures. As with any complex biopharma business, it is definitely not all sunshine and rainbows. And BA-Qsimi presents this totally fascinating paradox. Now, what's really interesting here is the contrast. I literally just told you that BA-Qsimi prescriptions were up 17%, right? Amazing volume growth. However, the actual net revenue for the product slipped. How on earth does that happen? Well, it comes down to intense pricing pressures, much higher rebates, and those mandatory 340B discounts. This perfectly illustrates a major red flag we see all the time in the pharma space. Sometimes, even when significantly more patients are using your drug, the brutal pricing dynamics mean you are actually making less money off of it. Unfortunately, the red flags really don't stop there. Let's walk through some of these other major hurdles. First off, glucagon sales absolutely plummeted by 42%, dropping down to $11.9 million. Why? A massive surge in market competition. And to be fair, management frankly admitted on their call that they just don't expect this product to return to growth. It's a lost cause. Second, Amphastar got hit with an FDA warning letter regarding their IMS manufacturing facility. Now, it hasn't caused a full shutdown, thankfully, but it is forcing them to spend way more on quality review, and it's severely slowing down their batch releases. Third, operating expenses are just rising across the board. And lastly, there is a looming $100 million milestone payment. Because Baqsimi crossed a specific annual sales threshold, Amphastar now owes this massive lump sum cash payment to Eli Lilly.
Ouch.
So how is Wall Street digesting this crazy tug of war between a massive earnings beat and some pretty serious looming risks? Honestly, they're mixed. After the earnings beat, Piper Sandler actually cut their price target to $20. Meanwhile, Wells Fargo raised theirs but also landed at $20, keeping an equal weight rating. Overall, despite blowing past EPS estimates, the consensus rating is sitting at reduce, with an average target around $22. The big takeaway here is that analysts generally view the stock as fairly valued right now. They're showing a lot of caution, wondering if this current growth can actually outpace the rising operational costs and that fierce competition.
Let's look ahead. Section 5, the pipeline outlook, future catalysts and projections.
Let's quickly map out these future catalysts. Present day, they've officially initiated Phase 1 clinical trials for AMP-101. That's a highly anticipated nasal epinephrine product. In the near term, they are heavily focused on fixing those FDA issues at the IMS facility, all while advancing non-clinical studies for their oncology program, AMP-109. But guys, the really big horizon item is 2027. They are aggressively gearing up for the potential commercial launch of an insulin aspart biosimilar. They've already filed this with the FDA, and it targets a market worth over $1.6 billion. If they get that right, it's a massive potential growth engine. And because of this highly diversified portfolio, balancing those cash-generating older generics with exciting new proprietary launches, management is actually holding the line. Despite the FDA warning letter, despite the crazy pricing pressures, and despite getting crushed on glucagon, they are maintaining their guidance for the full year 2026. They're still projecting mid-single to high single-digit overall sales growth. They genuinely believe the underlying strength of the broader portfolio is going to carry them through the turbulence. Which brings us to the ultimate duality of this company's future. Look, Amphastar has clearly proven it can successfully launch new products, absolutely smash earnings expectations, and even widen its competitive moat by expanding profit margins. But the heavy gravity of the pharmaceutical industry, the ruthless competition, the strict FDA oversight, and that relentless pricing pressure, it is pulling hard in the exact opposite direction. So I'm going to leave you with this to chew on. With strong margins serving as their primary shield against rising competition, can Amphastar's innovative pipeline ultimately outpace its pricing pressures? It is an incredibly high-stakes balancing act. I really hope this explainer gave you the clarity to follow it closely as it unfolds. Thank you so much for learning with me today, and I'll catch you in the next one.